Welcome to Tradespoon. My name is Vlad Karpel. I'm the founder and CEO of Tradespoon. And today I'd like to talk about statistical analysis. Behind Tradespoon technology, everything we do is driven by statistical analysis. We're trying to predict key support and resistance levels. We're trying to predict which stocks we should trade on daily basis and what is the predictability favor. So it is very important to make sure we have basics behind statistical analysis. So let's take a look at some of the key terms. In this series, we will look at terms like standard deviation, bell-shaped curve, outliers, and probability analysis. What is the bell-shaped curve, and why is it important to know probability analysis? Bell-shaped curve looks like the chart you see on your right, where you are rolling two dices. And you know when you roll two dices and you do it over and over again, number 7 will come out most of the time. On the screen you see above 16%. The number 6 and 8 will come out roughly 14% of the time, and so forth and so on. And then if you connect all the dots together, then you see it looks like a bell-shaped curve. So probability analysis is a process of analyzing possible future events by considering alternate possible outcomes, sometimes called alternative worlds. Thus, the scenario analysis, which is the main method of projections, does not try to show one exact picture of the future. Instead, it presents consciously several alternative future developments. And especially for stock and option trading, this is very important to know what is the possible outcome, so where the stock is going to be by the time the expiration process, or by the time your time horizon for the trade is. So let's look at the terms such as one standard deviation for options. You see, U means where the stock is currently trading, and it can go up or down. U minus Q, that's Q where it is one standard deviation. So one standard deviation on the screen means that 68% of the time stock will trade within this range. Two standard deviation, meaning 95% of the time stock will trade in this range. So the bell-shaped curve and statistical analysis shows you, just like when we roll two dice, most of 50% of the time you know that 7 or 6 or 8 will come out. Same thing when you are a stock trader or an option trader, you know that within certain range the stock price will be by the time your trade will come into realization. So it determines support and resistance based on implied volatility or historical implied volatility. So at Tradespoon, we developed probability calculator that not only shows you the trend and buy and sell rating that you can see on your screen, that gives you a bullish bias, but it also helps you determine what optimal strategy you should implement. And on the screen you see Dow Chemical, where Dow currently trading at $50.85, the probability of Dow reaching $54.54, meaning $4 movement, roughly a little bit less than 10%, in the next 50 days, well, there is only 11% chance that this stock will reach that level. So on the bottom of the screen, you see historical volatility based on the past data and past Dow Chemical price movements. And implied volatility, where you see the red and green arrow, that's based on the implied volatility. It's based on demand and supply for in-the-money options for the next 50 days. Again, you can see more tools and more statistical analysis if you visit tradespoon.com and take our trial. You can also participate in our weekly webinars. And as always, please follow us on social media and spread the word. Thank you very much.